Hey, welcome to the Capital Discussions Roundtable. I'm Tom Nunemaker with Jim Riggio, and our guests today are John Locke and Dave Thomas. Before we get started, we have to go over a disclaimer that's on our websites everywhere. The Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. We don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations. The risk of loss in trading options can be substantial, so please be aware of all of your risks prior to placing any trades. Hypothetical computer-simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. So with that out of the way, since I'm not passing the ball to anybody, whoever it is, take it away. I guess Jim or John or Dave.
Okay, no, I'll take it from here, I guess. And just good evening, everybody. I'm here with today with David Thomas, and a lot of you, I don't know, might know him. Some of you may not. I know he's been active in trading groups. I think he's been active in some of the ones here in Capital Discussions. He's also been active down in Sheridan Mentoring. And speaking of that, that's where Dave and I met back in 2008 or the 2009 era, and I was a success coach at the time, and I was relatively new to trading, and it was at a time when most of the market-neutral traders, they were literally afraid to enter the market because they just got pummeled in 2008, and every time they entered from there on, every time they go in there, they just kind of get pummeled. So they're pretty scared about that, and there I was, I'm kicking butt month after month doing this trade I developed called an M9. And, my ability to do so well in that type of a market condition got some attention, and I had traders, they started kind of lining up to talk to me. And one of those traders was Dave. So, as a result, Dave and I kind of got to know each other. We became friends. We started doing some one-on-one coaching sessions. It was really in the early days when I was just starting to work with traders. And since then, not only has Dave developed into a really awesome trader, but he's also, taken what he learned, and he literally taught that his kids and other people how to trade and how to secure their future and do the same thing. So I was kind of thinking that it would be really cool if we came on here together and we kind of let Dave, tell you a story about how he did it. Because I know a lot of people are out there, they're struggling with trading, they're having a hard time, and they're just not, they're just not getting anywhere. So, maybe you can light up the path for you guys and, inspire you to do the same thing. So, I'm just going to ask Dave a few questions or two, get them going, and, if you've got any questions for either of us, you can just kind of let us know. And if we have time, I was thinking, maybe, I know Dave has, we were kind of talking earlier today, a more advanced trade that we got him doing, and maybe compare that to maybe doing a regular type of an M3 trade, if we have time to do that. So, that's what I was thinking, and hopefully, you guys really enjoy this. So, Dave, can you tell us a little about your journey, like, what was going on, I don't know, 5 or 6 years ago,
Sure.
and what you, what were the key elements in turning things around to the point where you're actually able to teach others, and even developed your own strategy, right? So, what do you think about that?
Well, thanks, John, and also Jim and Tom. I really appreciate you guys asking me to come on today. I think it's really pretty cool, and I mean, I remember very nicely, probably back about 6.5 years ago, when actually I think the first person that I ever talked to was Tom. And this was when I was first looking at Sheridan Mentoring as a possibility, and so he was I remember trying to get through their website and thinking that, is there anybody even there? And all of a sudden I get a call from Tom from Germany. So it was that was my introduction. But but just to clarify, timing, it seems like it's always very critical with market and timing and trading. But also, my next door neighbor today decided to have about 8 trees removed from his property, which is right next door to mine, and so there's noise outside of my window. Is it coming through on the speaker here at all?
Not really. It sounds fine.
Okay, because it's pretty loud here. But it figures, timing is everything, right? Not only with things that you can control, but also things you can't control. So, okay, well, great. That's good. I just want to check to make sure that you weren't hearing the, you know, the chainsaws that I'm hearing. So, but anyway, assuming that that's fine, I think, you know, the start of my journey prior to, I guess, meeting up with John was actually a friend of mine, a neighbor of mine, and he was doing some reading about options, and we just had a discussion one day over a cup of coffee or something, and I started to think about it, and then I was busy with my son during the wintertime going up skiing, which we tend to try to do quite a bit of. And as it turned out, after about 50 years of experience of skiing, figures that winter I end up getting into a little accident, which kind of curtailed my skiing for the rest of the winter. So it kind of was an interesting thing because I was my son, who wasn't 16 years old yet, still wanted to go up skiing. So I ended up driving him up to the slopes, and here I am taking many books with me to read in the lodge as he got a couple of runs in. So that's kind of where I started, and it was just kind of reading books and trying to figure out what's even an option. I mean, I had no idea. I was about as green as you could be. So it was truly starting from knowing nothing. And so basically, I ended up doing all this reading and while sitting up at in the ski lodge. And basically, what happened after that was I was like, well, sounds interesting. And then it was a matter of trying to figure out, okay, where can I learn more about this? So basically, it was just through internet research that I happened to stumble upon Dan Sheridan's website, and eventually ended up talking with Tom, and talked about the mentoring program there. And actually, it was kind of like probably the worst time or the best time to actually start mentoring or to start this was back in August of 2008. So, and I remember for the very first time, and it was the next month in September, that Dan actually came onto one of his mentoring sessions and says, well, if you're in the market, get the heck out. And it was, I think he said it's the only time that he's ever said it, but I said, well, maybe this is the best time to learn about options trading, because it's learning when, things are absolutely just crazy there with the financial crisis. And so it was a pretty harrowing time to be in the market. The one thing that I did notice, though, it seems like with options, or the people that were within the options community didn't seem to be as affected as people that were just sitting there with long stock positions. So that, certainly led me to believe about the whole, just the whole process of going through this and understanding what options were and how that's, and just how it all works. And so at that time, there was probably about a 4 or 5 month wait to get into start mentoring. And I was very fortunate that I ended up actually having Dan Harvey as my mentor, and that was started in 2009. So this was I didn't know it at the time, and I really didn't know that much about Dan at all. But as as the years have gone by, I feel extremely fortunate now to have had the opportunity to have him as my mentor. And he was a fantastic teacher, to be able to understand the fundamentals, and really truly from starting from absolutely no knowledge at all about options, except reading through some books, which I think after all probably was just more confusing than anything.
Right.
So I'm not sure.
Dave, just to interrupt you for a second, and I was thinking too, Dan Harvey, I know he shows up here a lot in capital discussions. He's just a really great guy, a really great trader, and I've worked with him too. So, just kind of saying how important it is to have a good mentor, and Dan was a really good one. So, if you're listening to him on a trading group, then make sure you listen to him really well. He's a good trader. All right. Sorry,
and actually, from the time that actually John and I first met, which was basically around the summertime of 2009, at one of these reunions in Chicago, I had actually asked, I had just finished up my mentoring with Dan Harvey, and asked to see if I could start a trading group within the Sheridan arena. And basically what we started a trading group that was all the people that had been mentored by Dan Harvey. So it was this, I just thought of an idea, and actually Dan joined us on that, or in that trading group for many of the sessions, which was great because he had a chance to connect with a lot of his students. All the students, we were being taught by a similar mentor, so it was a really nice way to be able to do that, and we had that group going for about 2.5 years, which was a great time. For me personally, during those 2.5 years, it was a time of I guess getting to know the trades, trying to keep the amounts of money in the market small, and it was a great time to learn just what all these things were, because I had been taught all this information from Dan, and all of a sudden it was, okay, now you actually have to go and do something with it. So you had to start slow, and there was all these kinds of trades, which, I have to laugh though, because I look back at some of the names of the trades, and, it's like, we talked about, John, you talked about your trades with, M3 and M9 and Rock and M21 and all these different trades. And, I look back and there was lazy man condors and, earnings plays, and, there was, heart-friendly butterflies. There were, skinny butterflies, fat butterflies, Bailey butterflies, Shannon butterflies, you name it, everybody had a name for something. So, what that gave me, though, was a lot of different things to look at, especially with butterflies, to be able to use that as an understanding and as a platform to truly get into it and really understand how all those things work. And, and in addition to that, high prob, low prob condors, and those things that some people do, but I don't, calendars, double diagonals, and all those. Those were all great things to be able to go in and actually learn the basics, which, as I told you, I knew nothing coming in. So it was a good chance to really learn that. So,
right.
And there was even times during that time frame where, there was a whole big thing about doing weeklies. And that's kind of was not even around when people weren't offering the weekly kind of options. Then they were, and some people looked at that and said, no, that's probably not a good thing. And so, of course, I had to kind of check it out a little bit and, looked in that. But, I found out quickly after, trying it for, just for a few months that, weeklies were not going to fit with my lifestyle, with my trading lifestyle. I did not want to try to be, tied to the computer. As John says many times with like an M3 kind of trade, it's a trade that you really don't have to, you can check in, once or twice a day, and if you're doing more, you're probably over trading it. And I truly believe that. So it's, a lot of these things are lessons learned just over time. And one of the key points, which I should have said maybe right up front, was one of the things that I, after or before venturing into this whole thing, as usual, I had run many businesses or during my actual working career prior to getting into options. And one of the things is that I assumed that there would be probably a 5 to 6 year startup phase where I would be trying this, learning it, doing trades, making some money, losing some money. I knew it would all happen, just like starting any new business. So one of the key things is that, I made sure that before going into this that, I had enough savings in place to make sure that I could actually, continue to pay the mortgage and put food on the table for the family to get me through the startup time, which I think is something that,
Dave, I think that is just such a key thing when people are coming in and learn how to trade. They don't understand, because the requirements for entry into trading is basically you have to have a few $1,000s and you sign up for an account, right? Because of that, they don't understand that they are actually learning a new business. They're going into a whole new career, a whole new business, and they don't and you need to understand that when you do that, there's a learning curve that's not months, it's years, and it just takes time, and you have to hit it and hit it and hit it, and you want to be trading very small. You said that earlier. When you start going, you really need to be trading small. So that's excellent points, David. Thank you.
Yeah, I think it's a key point, and so I looked at that time frame from about January of 2009 through about the end of 2011. And, I actually went through a little bit of analysis even before to say, okay, well, where am I at this point? And this was just before John and I actually formally got together with doing mentoring sessions. And, I did a little bit of, business analysis and said, well, at that point, I had basically, we all kind of say, well, gee, how much money did it take us to, how much does mentoring cost? And, what are all the various costs to do all these things and everything? And to me, it was always, yes, that's part of it, but, how are you doing with your trading? And, I had looked at it and said, I had probably, from that standpoint, had spent about a half a year of my normal salary on what I called it was my tuition bill. And that was a combination of, mentoring and trading. And part of the trading was not worrying so much about losing money. It was a matter of learning how to trade. And so many times, even I remember many times going through with both John and also I remember Dan Harvey, the concept was, look, many times you will do all the right things, but the market's just going to take you out. And so then the big question is how not to necessarily make money, but how just not to lose money or to minimize your losses. And that has always been that has become clearer and clearer as the years have gone by, for sure. So basically at that point, basically around 2012, M3, the M3 trade and the M9 trade, or bearish butterfly as some people call it, I started looking at as that was my kind of my graduate course. If I say that my time with Dan Harvey was my undergraduate career in options, now I was looking to go into kind of a more intense study with John Locke, and to take learning to the next level. And so, if you take a look at basically from 2012 to the current time, it's been a combination of each year, M3 and M9, really putting on trades, learning them, eventually getting into the rock trade, and also during those times I started doing cash secured puts. A few of my other friends, we kind of did this thing called a parking trade, which is basically just a bull put credit spread, so it's not really a big deal, but we threw that out there as something that people could do. And broken wing condors, which many people have done, and then last year, John came out with his M21, which is providing, more technical analysis into all of those various trades. And now this year, new things on the horizon, advanced position management and beyond. So to me, it's just the goal has always been to be able to get a consistent and steady income. It's as clear and as simple as that. All of this I'm not in this for the academics. I'm in this basically to, provide for my family and to be able to provide a consistent and steady income on an ongoing basis. And, probably one of the nicest things that's happened is that when I started with John formally in 2012, which was almost a little bit over 3 years ago, I also started teaching my son and my daughter and my daughter's boyfriend and other people. And it's been quite interesting going through that time frame of not only being mentored, but then me being the mentor for others. And one thing that you really find out is if you're the mentor, you find out how well you really know what you're talking about as you get questions from people and have to answer them. And so it's been a fantastic journey for myself personally, not only for my own trading, but also for providing potentially a career or a way to be able to add income to my son and my daughter's current jobs. But that's been a very, very fruitful time for us to be able to, they have learned a lot from, I guess, the scars that I've developed on my backside over the past, some years of, mistakes and all the things that I've done. And the crazy thing is their performance to date, it's a little bit, interesting, but they have done actually better than I have done, which is kind of interesting because they have simply, followed the rules and not worried about market conditions, not worried about what the futures are doing every morning, whether the whether the, Congress is going to pass, budgets or whatever. They just trade what is given to them. And it kind of puts things into perspective. So it's been a...
There's something to say about that, right, Dave?
Well,
Yeah.
It's funny. I was talking to my son this morning, and I was hopefully going to try to get his a copy of his Excel spreadsheet, which he's got all of his performance information on. But unfortunately, he was already at work, and I couldn't get it from him. But I know for a fact, because of doing his tax returns, that I know every year that he's traded, and he's made a profit. Now, the interesting part of that whole discussion, though, is before he put on any trade, he actually did a tremendous amount of, and I know there's a lot of people that, will have discussions about back testing, if it's relevant or not or whatever, but I think that for his particular way of understanding and learning as far as of options in most things in life for him, he loves to go and learn about it by repetition, and he actually went and did, many, many, many years of back testing just simply on the M9 and eventually other trades as well. But the crazy thing is that the day that he actually put on his first live trade, 3 years ago, he had max loss. His first month trade, he had a max loss. And it was nothing that he did. It was basically just one of those months. And I remember the conversation very vividly. We were sitting in the kitchen, and my wife was basically saying, "Oh my gosh, this is going to be terrible," and she felt so bad for him, and so did I. But his comment was incredible, because he basically said, "Hey," he says, "I know through the 10, 20 years of back testing that he actually did of various permutations and combinations of the M9 trade." He says, "I know this happens, but I also know that the majority of the time they're going to be winners or at least small losses. But I know those max losses, they creep up on you every so often." So his comment was, "Okay, are we gonna put the next trade on tomorrow?" So
yeah,
he had complete confidence to keep on going.
Right, and the back trading gave him that confidence, right? So that's important. You have
Absolutely.
to have confidence in your system, or you're not going to trade it. So you have to follow it. Excellent.
Absolutely. So, just that in itself, there's been, and those provide learning experiences for many people, including myself. So, anyways, I mean, that's kind of the long and short story, I guess, of my trading career so far. And obviously I probably have left a lot of people out in between. I mean, I've never met Tom personally, but I know I met Jim in Chicago on one of the reunions, and we had a great time there. And and many others, along the way. But it's but I think those are, I thought the relevant parts that as people would be listening to something like, gee, what has been this guy's, journey through this, options, opportunity for making income. I thought those were, kind of some of the most relevant points.
Right. Hey, it looks like we got a couple of questions too, huh? You want to ask them, Tom, or?
Yeah, sorry, I was on mute. Let's see here. Okay, so could Dave talk about why he needed coaching from John when he was going through shared and mentoring?
Yeah, that's a great question. I think that's from ML. After going through the mentoring, about 6 months worth of mentoring, it took a few years to actually go and learn and just try out the trades. But I finally found at that point that I was not getting consistent and steady income, and I felt I really needed to, get further education to be able to, in my head, to take it to the next level. And that next level was, okay, just like in undergraduate school, I learned the basics, but I was making some money during that time frame, but it wasn't consistent, it wasn't steady, it wasn't where I needed to be. And like I said, John and I had been talking for quite some time, and I finally decided to the one thing that one of the many things that I really like about John is that, you know, of the trades that he's doing, not only is he always trying to improve and do different things and improve upon what he's doing, but he actually is trading every day. Now, maybe he's not doing a trade every day, but this is not something that, you know, was, you know, something that he's learned over the years. But right today, you know, he's got trades on just like all of us. So to me, I think that makes a big difference, and that was a huge attraction to me.
Okay, let's see. Did you want to say something, John?
Oh, nothing. I said, yeah. I mean, and you know, just so you know, I do trade. You know, not only do I teach, but I also trade. A lot of teachers don't trade, but I do trade these every day. And not only do I trade them, but I trade this. I've been trading this same strategies essentially since I started back in 2007. So year after year, month after month, through all the conditions that we've had, I've been, you know, live trading this stuff. Is always making improvements, always passing them on to people, and by doing the same thing over and over again, you can really fine-tune things so they work really well, rather than jumping around from a weekly to a calendar to a condor, that type of stuff. So it's very good to be consistent with that type of stuff. That's all I was going to say.
Okay, and Ray had a question. What order would you encourage people to go through the various methods of John's system?
I don't know, John, do you want to answer that, or do you want me to answer that?
Well, you can. I know you started with an M9 because that's what I had available at the time. I
started with
M3.
Actually, I started with M3 and M9 at the same time.
Oh, did you? Okay. So I'm a little bit off on that. What do you think helped you most?
I think, well, actually, I'm looking at the chat here, and I'm looking at Tim Pearson's question of what would you say turned your trading around and became profitable. You know, I think one of the things what I've learned over the years is the more conservative that I have gotten over the years, and conservative just in not only my thinking but also the style of trades that I've been doing, the more profitable I've become. You know, all of the fancy things of trying earnings plays and this kind of play and all these, there's so many different ways that you can actually try to earn money through options, and yeah. I seem to have whittled all the, I literally went today back to my mentoring with Dan Harvey, and I looked back at the different kinds of things that I was doing, and you know, Hewlett-Packard Iron Condors and Walmart calendars and IBM calendars and, you know, Coke calendars and Google double calendars and all these interesting things, but you know, I do none of those today. Right, and I would say that what you're saying right there is probably what turned my trading around, because, you know, I was back in 2006 when I started. If anybody who know me, I knew nothing about the stock market. I didn't even know what a stock was when I started. And I started with Invest Tools and went through all that programs. But, you know, you get hit with doing 100 different things. There's so many opportunities. There's weeklies, there's day trading, there's investing, there's options, there's stocks, there's all kinds of stuff. And, you know, when did I start making money? When I shut it all down. And I said, you know what, I'm going to take this one thing that I think is the most profitable, and I am going to work with it until it freaking works. And that's when things turned around. And I think that's pretty much what you're saying as well, right? I mean, yeah, I mean, even just in the past year, as I looked through, you know, I mean, I started doing M3 trades back in, you know, the latter part of 2011, and I looked at how I kind of recommitted myself even back in the early part of, well, almost exactly a year ago, as far as really taking it to the next level of education for myself and really getting in there and really learning about it, and it made a huge difference. But the biggest thing was, and a lot of this came with also was my, when I was doing it at the same time, you know, I'm trying to learn and also teach it to my son at the same time, and my daughter. And part of it were questions that they would come up with. And it's like, Dad, you know, does this look like, I'm not sure if I feel comfortable at the end of the day today if I want to move on to the next day. And I was like, well, let's take a look at this. And what we found out was that, you know, we'd almost then develop some of our own little tweaks that because of our either conservative nature or whatever, we said, hey, you know, we need to kind of look at this. And it seems like the more conservative we got, the better the trading became and the more profits came in. So it's, you know, it's kind of flips around what most people think, that you got to be, you know, more aggressive and to make more money. But it seems like for us, the exact opposite has been happening.
Yeah, I tend to agree with that too. If you get too risky, I mean, there's times, you know, once you get to be a good trader, there's times when it makes sense to take on certain risks. But a lot of times it doesn't make sense. And if you can kind of pick your times a little bit, in other words, trade an M3 when you really don't know, and then be a little bit more aggressive when things are really look like they might be in your favor, you can really start bumping your returns too. So, but yeah, that whole thing goes around kind of being a little bit more conservative.
I think I'm looking at Andy's question here, saying, is this your primary source of income now? And Andy, absolutely it is. This is my full-time 100% job.
Right, and it feels great to be able to just be a trader, right, and not have to worry about other things.
Yeah, it's I love the commute, you know, and just from second floor to first floor, but you know, it's a much better commute than I used to do when you know, it would be taking me you know, 2.5 hours each way to get to work back many years ago.
Right. I guess there's some more questions too. Can you see them, Dave?
Yeah, I'm just looking at them right here.
Okay.
Yeah, it says, I think Robert says, were there times that you were discouraged and just pushed on through? Yeah, that's kind of a constant.
Yes, I'll answer that one. Yes, even on my side, right? So.
Sure. And let's see. I think let's see. Bhaskar is saying, "I am familiar with Brian Johnson's risk-return ratios." I have no idea. John, you?
With Brian? No, I don't know who Brian Johnson is. So.
No, me neither.
Yep.
I think that's a book Dan Harvey recommended in our trading group last week.
Oh, okay.
Okay.
What's he trade, Tom? Do you know?
Dan or Brian?
Brian Johnson.
I haven't seen the book.
Okay, you haven't seen it either? Okay. Yeah, so we don't know.
Right. Dave, you know, you talked a little bit about being more conservative. There's a great quote from Ben Hogan about how to score in golf, and he said, scoring in golf is about hitting better bad shots. The same thing's true in trading. The whole way you end up making money in the long term is being able to have better bad trades, or, you know, less losses on your losing trades, because you will have losing trades. It's part of life. It's part of trading. But learning how to end up being able to control those. And, you know, John, when we've spoken about, you know, things like, you know, your M3, the thing that I was always just so impressed with it was that how flat you could end up keeping your P&L curve. Because there will be times, okay, when you end up having these massive moves. You know, you take a look at it. I know in the trading group this afternoon that Tom was running, somebody, I think it was Paul Demers, was talking about how a hedge fund ended up going out of business in Miami, lost I don't know how many hundreds of millions of dollars because they had a bet on the Swiss franc when it moved. You're going to get these moves, right? You're going to get these moves. You think about what ended up happening. We haven't had a 22% overnight move since 1987, but you're going to get these moves. And having things that are very resilient and giving up, profits. You know, if you ever take a look at any type of mathematical model, Tom has a P&L calculator on the website. You take a look at having smaller, wins and smaller losses, but being able to end up increasing your percentage. The key, though, is it's not really as much as your winning percentage or how much you make when you win. The whole risk of ruin, are you going to be able to make this? It's all about being able to control those losing trades. And John, you and I have talked for many, many years. And if I say that there's one thing that you're obsessed with, it's about controlling risk, controlling those losing trades. And to me, I think that's the single biggest key of success.
Yeah, one of the things actually, guys, is I was looking through some of my, and kind of thinking about today, I actually took a trip down Memory Road and looked at some of my old trades from years ago, and it was kind of amazing. The thing that I noticed was, what has happened is that those really awful trades that you would all of a sudden go way beyond what you thought would be your max loss are not happening anymore. So it's those times where, and just like what you were saying, Jim, where you're truly managing your losses and getting them down to as low as possible, because they will happen. It's a matter of just trying to manage them down to the lowest level.
It's not a question of if, it's a question of when, because those moves will happen. And the fact that we have fat tails, especially on the downside, where volatility pops, you know that it's going to end up happening. And if you think that you're smarter than everybody else and can end up picking those, well, that's great. It's there's so few people that can end up doing that. So few.
And the one thing, and paralleling that, one of the things I actually did go through as well is, from a standpoint of consistency, and this is something that, you really have to think about is, I went through all of my, trades, whether they're, M3 trades, M9 trades, rock trades, M21 trades, and by far, the one, the M3 trade, since literally the first day that I put it on, 2011, every single year they have made money. So it's not in the sense that it's been, like a big up year and then a big down year or whatever. They've been, and the other part about it is that I tend to, actually, my friend Tim Pearson told me about this, and he said that, to try to make some sort of a good way to look at trades, we kind of look at dollars or dollars profit per every lot that we put on. And one thing that it truly shows is the progression over time of either you're doing better or you're not. And so regardless of, because many people will put a 1 lot on, then they'll be doing a 5 and then a 10 and 20, and then, they keep on going from there, hopefully. And, what you're really trying to do is, you're trying to also improve your, performance of getting just, you're getting more dollars per lot as you go along. And that it's kind of a good measurement tool. But the one thing that I was saying is that, if I take a look at the M3, it's been consistent where, for instance, if I look back at, 2011, 2012, my average trade was making about 3%. If I look at last year in 2014, my average trade, and this includes losses, the average trade was up to about 7.5%. So, those are true figures and they don't lie. And it shows the progression over time of learning. And, they're basically the same trades, but it's also looking at it, learning more about it, really getting down and dirty as far as learning the fundamentals and getting, I think, more and more conservative as time has gone on. So, that's from my perspective, it's very encouraging to be able to look at, past history and show the progression over the time where it's not just the last couple of months trades. I mean, this is over the past almost 4 or 5 years now.
John, one of the questions that was also in here was that in low vol environments, is the M3 worth doing? And you and I have had a lot of conversations not only about vol levels, but also skew. Could you end up talking about, the trade-offs in the M3 in terms of where the vol and the skew is?
Yeah, so, well, with the vols and the low and the skews, it's fine. The bigger challenge is if you have an extreme low volatility environment in a market that's grinding up or faster than realistically the volatility is telling you it should be, then you can have challenges making money with the M3. If you're trading it properly, you shouldn't be losing money. So, in other words, the trade is essentially designed to, if the market really takes off to the upside, that you're going to break even plus or minus 1% or something like that. You get a year like 2013, extremely low volatility. If you're not taking any market conditions into consideration and you're trading it just a normal way, it's kind of a break-even type of a scenario that you're going to encounter. However, like I think we returned, it completely by guidelines, I think the position returned like 30% in 2013. But if you take market conditions into consideration just a little bit, and you say, hey, we're in a bullish market, and you just lean that delta slightly a little bit long, then that takes your 2 or 3% gain and your break evens, and it brings them to 4 to 7% gains to the upside. So you can do that and still reasonably well protect your downside and make the trade perform. So and there's a lot of that we talk about when we get into one-on-one coaching and stuff like that. There's a lot of different things that you can do. But the M3 trade by itself, it is the most challenging environment to trade. In other words, it's easier to trade an environment like this with an M3 or late 2011 after the crash when you're getting 450-point moves every 2 days than it is to do a very low volatility trade. That's actually a more challenging environment. It's definitely winnable, and there's things that you can do that, but it is harder. Yeah. Oh, so that answers that.
I see a question from Thomas T. where he's saying, how long did it take me to leave my job and make trading my primary source of income? I think I mentioned earlier that I made sure that I had a savings account set up so that I had income, so that I basically wanted to be able to dedicate this for at least about 5 or 6 years because I wanted to make sure that I could provide for everyone. So and knowing with a typical startup how long things take. That's what I did to make sure that. I mean, I waited until I had the time to be able to have those savings in there to make sure that I didn't have to trade to try to make money, for that month type thing.
Right. So you were probably full-time before you probably should have been, and
that's right.
You probably weren't right. So you're quote-unquote full-time trader drawing off. So the more appropriate question might be, how long did it take until you turned to the point where you could actually pay your bills through trading, right?
Right, and I think that's the typical 5 or 6 years. I think that's we're right on target.
Hey, John, there was a question. Is there any meaning to the naming of your trades?
You know what? M just stands for method, and the number is how many experiments I've had that failed. An M3 is, well, not necessarily how many failed, because they didn't all fail to get to them, but an M3, I had 2 major trading systems that I did before I came up with the M3 system, and that's method 3. Another thing David trades is an M9, which eventually was coined the bearish butterfly, and then we have the rock, which is another M number, and we have the M21. So the 21 is essentially the 21st trading system that I've come up with. There are numbers in between that have failed, or just were not good enough, and we kind of put those to the side. But that's essentially what they mean.
Thanks. And then Andre asked, would you trade these strategies in a 401k, or would you keep it separate?
If you're able to trade them in your 401k, yeah. If you're given that kind of options permission, it's in a 401k. Sometimes you're not, but yeah, I have no trouble with a 401k.
They could always be traded. You could take a 401k and you could roll it over into an IRA, and then you could end up trading it at an IRA at any of the brokers that we've talked about.
Right. Yeah, because Jim knows more about this than I do. I just know a lot of 401ks have limitations. I mean, I know my wife has a 401k from a job she has that she can't do anything with. So
most 401ks only have certain options that you can choose from, predefined options, alternatives that you could end up choosing from, and usually you can't end up trading specific option strategies. I'd say that there's probably a 95+% chance you'd have to end up rolling it into an IRA and then could end up doing it. IB, Live Vol, Thinkorswim, you can trade them in IRAs all the time. Some of your margin requirements are a little bit different, but I know that John spends a lot of time looking at Reg T and max loss type conditions that could be traded at any of those brokerages.
Yeah, right. There's alternative ways to trade sometimes. We get into the M3, we have all different kinds of options all over the place, especially you get into the more advanced aspects of the M3. But yeah, there are aspects where we could do it with crazy margining requirements sometimes. I mean, in other words, if you have a broker that will margin your front wing and your back wing different if they're a different width, which isn't correct because you don't have that much actual risk. But if that's the case, there are things you can do to get around that, and you know, because we've dealt with them, because different countries and different brokers have different issues. It just makes things a little bit harder, that's all. Okay, so let's see. Are there any other questions here? Or?
I see one, John. I see one for me, John, from, I'm not sure how to pronounce the name, Jens Rothard, asking, was there a special experience to discover trading M3 into expiration compared to closing it earlier, i.e. latest like 9 days till expiration? I think the M3 trade, depending upon how far, I mean, just to give you an idea, usually when my son was trading it, normally 21 days before expiration is where he felt comfortable getting out, and that was part of that was because of, you know, he can't look at his positions during the day when he's at his other job, and so, you know, he can't do that. So and the closer you get to expiration, obviously the more you have to potentially look at it during the day, especially during the last, you know, 4 or 5 days. But I think for me personally, it's my only confidence level of going closer and closer into the expiration time frame was working with John one-on-one. that was a to be able to see, you know, his artistry of how to be able to navigate through those time frames. You know, it was quite something. And so that's without that, I would have never even come close to it.
Right. The reality is with coming into expiration, if you're truly following M3 concept, you can come right into expiration day with an M3 relatively flat T plus 0 line. The challenge is people try to get on top of the position, and that's when they take on all their risk, and they risk it blown out one way or the other with the market moves. So if you're truly in M3 concept, you can do that. It doesn't mean you're going to make money coming into expiration, because essentially you're not really under the tent. But you can maintain that position right up until expiration, and you know, if the market cooperates with you, you can make a significant amount of money doing so. If it doesn't, you're probably not going to make any more money, but it's certainly a great experience doing that. So if you want to take that risk, you can do it, but you can do it without, you know, getting your face ripped off. Right, Dave?
John, I think there's a question more for you from Dale about he's recently purchased your package. You see that one?
No, hold on, I'll find it.
He says he purchased your package, and he's on his 3rd trade now. He says, my first 2 trades were profitable. My 3rd is in the green so far. Can I move on to the rock trade next, or should I go to the bearish butterfly?
You can go into the way the programs are. The rock trade incorporates the M3 trade, so you have to be able to trade the M3 well before you get into the rock trade. The bearish butterfly is also part of the rock trade, but it's only part of the rock trade. In other words, most of the time you will not be in a bearish butterfly position if you're in a rock trade, only if the market takes off to the upside. And you're only going to be using the bearish butterfly to the respect that you'd be doing expiration guidelines. So if that makes sense to you, you don't necessarily have to have a bearish butterfly course. You could talk to me one-on-one for like 1 session, and we could just go over the expiration guidelines and that. But yeah, if you're trading the M3 successfully and you want to go into the rock trade, then that would be that's a good next step. The only thing you're going to be missing is bearish butterfly expiration guidelines rules, because it was the course was put together. It was meant to have the M3, the bearish butterfly, and then the rock trade. What I usually do is once people have been successful for a reasonable amount of time with an M3 trade, and they can get up to like the $50,000 level, I'll put them in a $5,000 bearish butterfly, just to get to an experience of what a high gamma trade is like, right? Because it's very, very different from an M3. And that way you kind of get that experience down, you get used to how things work that way, and then you kind of get into the rock trade. You know, once you've done the bearish butterfly trade for a while, you've done the M3 trade for a while, it's very easy to kind of transition into a rock trade type of thing. So hopefully that answers that. But
hey, John, just you may have not caught this, but he's actually only on his 3rd M3 trade ever.
Oh, yeah, okay, yeah. So you should probably trade, yeah. How much more time do you think, Dave? I don't know, at least another 3 to 6 months, right?
You know, I mean, I guess it depends on how many he's putting on, but it's every month. But you know, from a standpoint of truly learning M3 before getting into the rock trade,
well, it
there's
can take
a lot
years
to
sometimes
learn.
because there's so much with the M3 that you can do.
Well, there's so much. I mean, people can look at the M3 and look at it and say it's pretty basic, but if you really get into it, it's, you know, it's very deep.
Yeah, right. Because you got these geek people like in the sharding community and stuff, and they're saying, "Hey, it's a butterfly with a call and some verticals," and you know, I think once you get going, you realize it's a lot more than that. Wouldn't you say,
I mean,
David?
I mean, I have probably called it similar things in the past, but it's actually, you know, the basics are that, but it, you know, there's a lot of detail.
Right.
You know, John, you and I have spoken about this, and for those that just called it, you know, butterfly below the money with a call, we talked about how that they're really counterweights or hedges towards one another. When one part's making money, the other's big. And I think that what ends up taking where you get to the artistry level is learning how to end up keeping those things in balance. People sometimes get them out of balance because they start to end up going for a lot bigger profits, and what ends up happening is that they don't keep you know, your different pieces in balance, and that's when the wheels can come off if they're not careful.
Right, right. Go ahead, David. Sorry.
I was going to say, one of the things that I would say concerning about, you know, number of trades on M3, and I only have to look to my son, where, you know, the amount of trades that he's been putting on right now are probably, well, it's only probably about, let's say, about 4 trades so far. But he's back tested it forever, and because he would only put the trade on before he back tested it for a long time to feel comfortable. But even with that, when he comes over for our typical Sunday dinner together with the family, you know, in between times, we always do at least a couple of months worth of back trading while he's here, because not only that, because it keeps you fresh when you're doing it, and it's not your full-time job like him. You kind of tend to forget about stuff, so it's a way to really keep fresh with it. And he's continually learning. I mean, he's only had a few on, and he's done back testing for a long time, but you know, we keep doing it. We keep at it. We keep at it, and we keep at it. And you know, there's no doubt in my mind that, you know, he will keep learning, because I'm continually learning new things myself.
Right, and I think the longer you can stay in M3, usually the better off you're going to be longer term.
Yeah. Now, as from a starting standpoint, this is kind of an interesting. He started with the M9, and you know, you may look at that and say, well, I'm not sure if that was the greatest thing in the world to do, because it's a. But the thought process was, you know, it's a heavy guideline style trade. You know, the rules are very definitive. And the nice thing about it is that you can actually start it easily with, just like you said, John, like you were saying, like a one lot, and you can do it in the Russell. You know, with an M3, you can do smaller lots. You need to get into stuff with IWM and stuff like that, and that makes it a little bit more, you know, confusing for some. Right. But for my son, it was something where he didn't have he didn't have much money, so it was a way for him to get into a very low margin style trade and start learning, and it was very definitive as far as the rules. So it wasn't what I liked for him to start because of the risk factor, but right. It was what fit to get him started.
Right, right, and again too, it depends a little bit on your style. I mean, if you're reading charts a little bit and you kind of like the back and forth, you like a lot of action, you don't mind a big drawdown, then bearish butterflies are fantastic. You know, if you're a really conservative type, then bearish butterflies can be pretty heartburning for you. So. Well,
and the reality is that over the 3 years that he's been doing this, he started with the M9, but what happened? His account, since he's always been profitable, his account, you know, kept on getting larger, and it got larger to the point where then he was actually able to put on his first M3 just a few months ago. but we waited until it was, the account was there to be able to handle it.
Right.
And also
right.
his level of knowledge at that point.
Right. I mean, the reality is you can do an M3 with as little as like $2,500 if you really squeak it out. But the problem is, we demonstrate everything in a $50,000 position because we just want it to be understandable to people so that they can back trade it. And I don't want you trading $50,000 if that's all you have, right? I mean, you should be trading a respective size for your skill level and your net worth. So, but the problem is when you go to like a $5,000 M3, it can be done, but it's actually much more complicated than doing a $50,000 M3. You have to do a lot of things that take you out of the butterfly call vertical type of structure. And so it's just a lot more challenging. So we do all the demonstrations with the 50K. I do give show you how to do the small positions. But that's one of those ironic things about trading. You should be trading small, but it's actually a lot more difficult. The good part about that is if you learn the $50,000 trade back trading, you learn the $5,000 trade back trading, you live trade the $5,000 trade, by the time you get, that's going to get you at such a skill level, being able to manage a position that small that when you blow up your size, it's going to be that much better and easier to trade, because you're going to have a much deeper understanding of what's going on with the position than if you kind of look at this thing as butterflies and calls. So, go ahead.
Yeah, I was just, I think that's great, John. I see another question from a gentleman, John Chernicki, which I think is a really great question. And he's asking me, he says, I mentioned trading more conservatively. He says, how are you trading the M3 more conservatively than the basic M3 guidelines? And it's actually a very, very simple thing. And my son and I found this out during our back testing together, is that, apart from the normal rules of delta, one of the things that we found was when we looked at the end of each day, at the end of the trading day, and it all depends on your personal, I guess, conservative nature or not conservative, and we looked at the trade and said, okay, if we wake up tomorrow morning and, the Russell has gapped up or down, X amount of points, and you can determine what the X is, 5, 10, 15, 20 or more. If you're not comfortable with whatever that number is showing you on your screen, then you need to do something. And even if maybe the delta is not saying that you're at a certain point yet, that doesn't matter. Ultimately, there are guidelines. But to be able to look at the entire trade, our way of doing it more conservatively was looking at it at the end of the day and saying, okay, are we okay with, if this happens tomorrow and overnight and we have no choice, are we comfortable? Now, some people might say, hey, look, max loss is what it is, and I'm comfortable to max loss. If you're not, then you can go more conservative than that. So that's, I think, the way that we've done it.
Right. Because the adjustments, obviously, usually to the upside, you usually don't have a problem because the T+0 line is relatively flat, but to the downside is where all your risk is. So, I mean, that being the case, some people are comfortable they'll look at it and say, geez, I'm just not that comfortable being that exposed to the downside. So the good thing about this trade is you can literally, you roll the position back in a manner that you don't affect your upside. A lot of trades, you get into these trades with a really steep mountain type of a T+0 line, you roll back and then the market reverses and you get head handed to you. Right? This is kind of designed so that you can make that roll back, but if the market takes off the other way, it's really not really an issue for you. If you're trading it properly, you should kind of run with that. That allows you to actually roll back a little bit early. You won't make as much money because you're trading conservative, but if you're until you learn how to deal with that risk, I mean, it's certainly a good option to have.
Hey, John, one question was, what's the capital allocation percentage for M3 and Rock trades?
I don't know if I understand the question. The capital allocation percentage, if you're going to be trading both?
No, that's all he said.
Yeah, I saw that question. I didn't understand it either.
Yeah, ultimately the M3, Bearish Butterfly, and Rock trade are designed to be traded together as one trade in like the M21 system, right? And if you don't know what the M21 system is, it's essentially where I show you how to analyze the market to determine where it's likely to go. And then what you do is you custom design this plan to deal with what the market's probably going to do. So if it were really, really overextended, you might be going into a more negative delta, or maybe even to put it more appropriately, you might be taking on risk that the market to the upside of the trade, right? With the M3 right now, if you're just doing an M3, it takes no risk to the upside, it puts all the risk on the downside. But if the Russell's been up 160 points in the last 30 days, you could probably take some upside risk 30 points higher. So you kind of design this thing so that it takes advantage of a 30 or 40 or 50 point pullback, which would be normal in a situation like that, at the expense of putting some risk to the upside of the trade, so that it makes the trade easy to manage and it's more profitable and stuff like that. So ultimately we're designed to put that together. Realistically, if you're trading an M21, if you look and you analyze the market and you say, I don't know what the hell's going on, I can't tell, I can't make heads or tails of it, I have risk in both directions, essentially you slammed into an M3. If you're, because that's a great trade if you're completely neutral of market opinion. Now, on the other hand, like I said, hey, Russell's been up 200 points in 30 days. If I look through history, it's never gone that far. Chances are it's not going to go a whole lot further. Let's take advantage of that by putting ourselves into a trade that really blossoms in the market. Right? So those are the kinds of things we eventually go to. If you want to trade the M3 and the rock trade together, a lot of times the rock trade's going to be an M3 anyway. You can split them. You could split them half and half and see. Or actually, what I would probably do is do 2/3 on an M3, 1/3 on a rock. That way, you have the same profit target and max loss numbers. You can trade them side by side. If one does poorly, hopefully the other one makes up for it.
And then, John, there was a question about if somebody signs up for your mentoring, are there trade logs available for back testing?
I don't have the trade logs available to other people. I'd rather have them trade their own way and then show me what their results are. I know they back traded it, and just from, in other words, I know what this trade should have made pretty much every month since 2006. And I want you to do the work, and I want you to show me what you did, and then we can take the difference of what you had, what you're getting, because the reality is you're going to trade a little bit differently than me anyway. There's enough flexibility in the rules, like Dave was saying. Some people are more conservative, some people are more aggressive. I want to see what you're doing, and if you're, there's a problem if you're making too much money. There's a problem if you're not making enough money in certain months. Right? So some people look at a system and, hey, I made a lot of money. Well, if I look at that, if you're pulling 10% out of the trade, and I know that was a 2% month, I know you're taking on too much risk somewhere. That type of thing. So I don't do that. I prefer to have you trade and then get you to do the right thing. I just think it's much more effective to learn in that manner.
That makes sense. And we did have about 3 questions about option view, basically asking, is that the best platform, or are there other platforms that are suitable for trading the M3? And do you have any complaints about option view, that kind of stuff? Just basically, what are your thoughts about using option view?
I think, put it this way. OptionView is the only software available that I know of. And yes, I am aware that Thinkorswim's available. I think I'm aware that ONE is available. But OptionView is the only one that you can set to project a T+0 line that represents what actually happens to the position. So I strongly recommend, and I would say go as far as say, is, especially if you're a new person, that OptionView is the only software you should be using to analyze the position. Thinkorswim and the other ones, they just go kablooey when you throw a bunch of options in, and you can compare them side by side, and you can watch the position and monitor the position, and you can see that if you're analyzing the thing on Thinkorswim and it shows you positive 20 delta and you move up 20 points, you're going to be down money. Right, where if you look at it at OptionView, it's going to show you're going to be down money. So, big difference in T+0 line profile. So really, OptionView is the only thing right now that has the appropriate settings that I'm aware of in order to project that. And I mean, you should be doing back trading anyway, so you should be using OptionView. Regarding its reliability, yeah, it's like a program from 1982 that was kind of pieced together. So I don't like its functionality. It breaks down a lot. It has its problems. Yes, I agree 100%. Unfortunately, it's the best thing we have available to us at right now. Can I trade the system without OptionView if we go out of business? I've been asked that. Is yes, you can. However, you just have to, because once you start trading this, you'll be aware of how far off Thinkorswim is, and you can kind of make adjustments to that. Right? You can say, okay, I'm looking at this in Thinkorswim. I know the market's grinding up, and I'm going to be showing way too much positive delta. Let me just give myself more positive delta, and that type of thing. So, in other words, I could trade an M3 trade with TOS, but it's very, very, very difficult, if not impossible, to learn on any other software, because the T+0 lines just aren't accurate, and you certainly can't use the same Greek numbers. So, anyway, that's my thought on OptionView in general.
Thanks, John. And Andy asked a question about your default settings, but I think we've got that in the forum, so I think we don't need to answer that one here. And we've gone over an hour anyway, so this is probably a good place to wrap it up. What do you think?
I think that would be perfect. And I'd like to thank Tom and Jim for having us on, and especially thank Dave for sharing his experience with us.
Yeah, and thanks everybody for Tom and Jim. Thanks for inviting me on. I'm glad we were able to. I know we were going to try to do this prior to the holidays, but it was just a little crazy, and I'm glad we kind of pushed it out now because I think it. We were able to have some good information for people. So I hope that it helps people along their journey.
You bet. All right. Well, thanks everyone, and thanks John and Dave for joining us. And Thursday, we're actually interesting. We're going to have Jamie Ruetz from Silex with Obsidian, and that's some option trading software that Jim uses. He's used it for a few years. It's a more expensive, a professional tool, but it'll be nice to see what's available, especially since there are many people in our community that do trade full-time, and it might be a good tool for them. So that'll be an interesting roundtable on Thursday.
Yeah, it's an institutional tool, so you guys will be able to end up seeing the other side. I also just wanted to end up thanking both John and Tom. Our community really appreciates it. Thank you so much for participating, and hopefully we can have you guys on again real soon.
All right, thanks, Jim.
Okay, thanks everyone.